Hey everyone, it's Julie here with TipRanks. Today we're taking a look at 3 strong buy oil service stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. In recent years, the oil industry has been anything but stable. With ongoing geopolitical tensions and some tariff uncertainty, there has been a mixed outlook for the industry. But just last week, we did hear from an analyst at Piper Sandler who outlined 3 stocks in the oil service sector that they rate a buy. So today, we're going to take a look at these companies, what it is that they do, and what has this analyst and others feeling bullish on the stock's future. Just before we get into these stocks, this is a reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's dive right into these 3 strong buy oil service stocks. First on the list is a company called National Energy Services Reunited. They trade under the ticker NESR, currently priced at $6.13. The stock is in the red this past year, falling 35%, down 2.5% in the last 3 months. National Energy Services is an international oilfield services operator whose activities extend across North Africa and the Middle East. They provide a long list of services vital to the industry's ability to extract fuels from unconventional plays. These include filtration, hydraulic fracturing, nitrogen services and pumping, and well completions, as well as essential drilling services such as directional drilling, fishing tools, and testing services. In addition to this, they also provide tools and equipment needed to drill and maintain active rigs. On the TipRanks AI stock analysis, they do come in with an outperform score. While the stock faces short-term technical challenges, strategic positioning and growth opportunities, particularly in Kuwait, provide a positive long-term outlook. Looking at their most recent earnings report, which came out near the start of June, the company did fall short of expectations on earnings and revenue. Their revenue decreased over 11% sequentially from the previous quarter, primarily due to a slowdown in Saudi Arabia during Ramadan, and their adjusted EBITDA did fall a bit as well, attributed to those project slowdowns. But their overall revenue did grow 2% year over year, and they recently won multiple key contracts that are expected to contribute to growth in 2025 and 2026. Recently weighing in was that analyst from Piper Sandler who said that the company has plenty of potential to generate gains in their core area of operations. He wrote that National is the only U.S.-listed pure-play Middle East service company providing investors a way to gain exposure to growth regions across the Middle East. In combination with its Roya directional drilling platform, they are well positioned to scale unconventional activity in the Middle East, particularly in the Jafurah Basin of Saudi Arabia. The stock does just have 3 current analyst ratings, but they all come in with a buy. And the average price target of $12 implies an upside potential of 96% from current prices. Looking at those ratings down below, they range from an upside of 63% to 145%. Second on our list today is Select Energy Services. They trade under the ticker WTTR, currently priced at $9.44. They are down 15% overall in the past year, but in the last 3 months have climbed up over 10%. Their focus is providing sustainable water and chemical solutions in the energy industry. Drilling operations frequently penetrate water tables as they target hydrocarbon layers, and unconventional extraction methods rely on mixtures of water, sands, and chemicals. So, Select's services revolve around water. The company supports critical water infrastructure assets, providing manufacturing and recycling capabilities for both water and chemicals, and makes technology available to promote sustainable water use, minimizing or preventing environmental damage through the full cycle of the target well. Select Energy is also rated an outperform on the TipRanks AI stock analysis. The technical indicators support a positive outlook, though valuation does remain a concern with a high PE ratio. They show a promising financial recovery with strong earnings call performance. And while they have been facing headwinds in the oil industry, they did come out with both an earnings and revenue beat in their latest quarterly report. Earnings per share of 8 cents beat by 1 cent per share, and revenue increased by 7% to $374.4 million. The company is also projecting 6 to 12% adjusted EBITDA growth for the second quarter, backed by new contracts. Weighing in once again was the analyst from Piper Sandler, who noted that the company was in an expanding niche in the oilfield sector. He said that a unique idiosyncratic catalyst for the company is the meaningful growth in water infrastructure, which comes with extended contract terms at elevated gross margins, providing for multi-year earnings visibility, specifically for its most recent water infrastructure announcement in Colorado, which management described as an opportunity to put really high gross margin related revenue through the company with contracts that could be up to 50 years in length. And with 4 current analyst ratings, Select Energy does come in as a unanimous strong buy. The average price target is $14, implying an upside potential of about 48%. And looking at those price targets down below, they range from an upside of 16% all the way up to 69%. If you've made it all the way to our third stock today, then do me a favor and make sure you've hit that thumbs up button. Last but not least, we're looking at Precision Drilling. They trade under the ticker PDS, currently priced at $51 per share. They're also in the red this past year, down 31%, but have gained over 16% in the last 3 months. Based out of my home country, Canada, they are known for providing high-performance drilling technology to the oil and gas industry. Precision offers a varied fleet of drilling rigs capable of pad walking and mechanized pipe handling, and featuring hydraulically raised mats. The company supports its drilling operations from rig construction through repair and maintenance, and offers a resilient, efficient supply chain during operations. They give their customers access to the latest technology and expertise. They did have some mixed results for their last earnings report near the end of April, and their next quarterly report is coming up soon on July 29th. While earnings per share of $1.61 did come in a few cents ahead of analyst expectations, revenue did come in at $496 million. That fell a bit short and decreased 6% from the first quarter last year. The company did, however, see strong adjusted EBITDA of $137 million and were on a positive earnings streak with their 11th consecutive quarter of positive net earnings. And once again, we heard from that analyst at Piper Sandler. He noted the company's leading role in the Canadian oil patch, saying that Precision Drilling is the most active driller in Canada with 34% market share. Importantly, with improving fundamentals, including LNG Canada and TMX expansion, its Super Triple and single rigs are at near full utilization. Despite a deflationary U.S. land market and soft outlook, they have a greater relative exposure to the Haynesville, which is an expected area of growth with the build-out of LNG takeaway capacity. They expect PDS to experience greater torque compared to their peers with each additional rig that returns to work. And with 8 current analyst ratings, Precision Drilling comes in as a strong buy with 6 buys and 2 holds. The average price target is $68.44, implying an upside potential of 34%. And looking at those recent ratings, they do range from a slight downside of 1% with our hold rating here to an upside of 77%. So that is a quick look at 3 oil services stocks recently highlighted by Piper Sandler and coming in as a strong buy overall from Wall Street. Let me know your thoughts on these companies in the comments down below and whether you think these headwinds will keep these stocks down or if things are going to turn around here soon. I always appreciate hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you always stick to your own investment plan. Thank you guys so much for watching. Have a wonderful day, and I'll see you back here next time.